before we start, how many were in Frank's class yesterday on 162 where he announced what a terrible drain on education PowerPoint is? I would like you to notice we do have PowerPoint for this class. I will control it, okay? Yeah.
Just before we start, just two things. Number one, Sherrill and I both have urgency to leave, so we may do a quick lunch and depart. So if we don't seem like we're ignoring you, it's not, all right?
Yeah.
And I noticed Phyllis last night, she gave the installation, and did you notice she said, by the authority vested in me? What authority? So, by the authority invested in me, Sherrill can cut to the front of the lunch line if she wishes. Is that all right?
We have a revision. You're going out first.
Number two, if Sherrill looks a little distraught today, she is a mother hen to 50 or 60 little chicks who are taking the tax court exam next Wednesday. So if she seems, that's the reason. But seriously, good luck to Sherrill and her. Some of the people are in your class, 50 to 60 folks next Wednesday, all right?
We're all going to be so happy when it's over. All right, Frank, are we ever going to get a new Circular 230, hon?
It doesn't appear to. I mean, this is like an ongoing, you know, remember that guy in Greek mythology that used to roll the rock up the hill and it always kept coming back on him? That's what's going on here. And you can see the chronology up there. The last time was 2014, correct? That Circular 230 was put out. They issued proposed regulations in December of 24.
Which are these?
A lot of stuff there. And the comments, and then there's a public hearing. And one of the things I want to do is I want to congratulate NYSSEA. Dan mentioned it last night, but it was really one of the best kept secrets going on, that NYSSEA did do a masterful job of submitting comments. All right, they were better than many other organizations for sure, let me tell you. And if you ever get a chance, you can take a look, and they're on the website, I think, Jeff, is that right? In the member section, are those comments still there? All right, so if you want to see what was said, and now it's just a waiting game, and Sherrill and I are sort of in a quandary here, because we know some things are going to change, but you don't know what. So a lot of what's in the text is the current. And maybe next year if we did this again, or maybe the next year after that, or maybe the next year after that, we may still say we're waiting for the final version, you know?
You remember they've been saying this for at least a couple of years, right? I mean, seriously. But it's not owned by IRS, it's owned by Department of Treasury, and everything is sort of a mess right now, correct? So they're working on it. They're working on it.
And that bottom thing there is really kind of important in your handout, that it seems, and Sherrill will either agree or disagree with me, that Circular 230 is designed now just for representation almost, you know, and there's some troublesome questions which we'll talk about a little bit later on. But instead of saying you got to be due diligent and everything, it says in representing someone you got to be due diligent, and that's,
Well, we kind of think you should be good at doing a tax return too, right? I mean, that's our opinion. All right, so we want to let you know that IRS is now verifying your CE when you renew. My renewal period is upcoming. They started this with the last renewal period, and they are continuing with it. So be aware that they are going to look at how many hours of CE. It's no longer just self-certification, and maybe you'll be audited. So what they found when they first started is some people were getting CE from non-authorized providers, or their credits were not submitted to the IRS, thank you, Frank, or they could not produce the certificates. Now, Frank, back in the day, we had to keep like the whole syllabus, the handout or something, right?
Yeah, Circular 230 still requires, I don't think anyone, a few,
I do.
one or two people.
Yeah, some of us do, right? Everything,
It
right?
still requires that, or at least it says it in there, whether it's real or not, that you have to have, and I'll quote, written outlines, course syllabi, textbooks, or other materials. So theoretically, you are supposed to keep either your printouts or your handouts or whatever. I mean, I don't think the IRS is enforcing that. The certificates probably will cut the day, but just be aware of that.
I think the difference now is that as a provider, we must report the hours to the IRS, and so maybe that, they've been cracking down on the CE providers. And so now, for example, when we get a program number, that number expires in 3 years, so we can no longer be issuing CE on very old classes. We're supposed to update them anyway if you have new information, but now those numbers automatically expire at the end of 3 years. So I think maybe as there is more that will be reported to the IRS, they will care less whether I'm keeping all of my handouts. But wouldn't it be nice to get rid of some of them, right, Betsy? There's a lot. I've got a lot. So we're going to say this, always, always, always get your CE from somebody who is a provider that is recognized, that is authorized. If you are taking a class and there is no program number, it is not an authorized class because they are supposed to have that program number before selling the class. So you take your stuff from NYSSEA, you take it from a multitude of other providers, that's fine. Make sure there's a program number. Make sure you have those 2 hours of ethics, because I do talk to people who let that date pass, and suddenly in January they're like, oh no, what do I do? And they're usually pretty forgiving. They'll let you catch it up, but you can end up unable to represent for a period of time if you have not met the minimum standards. And all of you in this room are ethical as all get out, I can tell. You're sitting here, you're going to get credit, but just make sure every year. And you can't take 6 hours of ethics, you can only take 2. They don't give you credit for those extra hours, okay? So let's be extra ethical, but you only get 2. And then, Frank, you have some thoughts about practice management.
Yeah, right now, currently, if a organization such as NYSSEA offers a 2-hour session on practice management of any type, it would count for education. Let's say, for example, when you used to be, NAEA used to have requirements, they don't have it anymore, but it wouldn't count for IRS credit. So it is really interesting. In November of 2024, if you remember back to the first sheet, it said the regulations were proposed in December of 24. The month earlier, IRSAC, which is the Internal Revenue Service Advisory Committee, and theoretically they have some input with the IRS. I don't know how true it is or not, but by the way, I got to tell you a quick story. You remember when Chuck Rettig was commissioner of the IRS? I was the chair of IRSAC in the year 2009, and guess who was one of the members of the committee? Chuck Rettig. So for 1 year, I was able to boss around the commissioner of the Internal Revenue Service. I didn't get any pass-go cards from him, though, but in any case, what IRSAC did this November was propose that Circular 230 be changed to allow 4 hours of continuing education that consists of practice management. And one of the things that, I don't want to go ahead of what the new one is, but the reason IRSAC suggested it was because of all the changes in the world, and it makes sense to do that. And when the IRS did the proposed regulations, they put an emphasis on being, things that are non-tax. You have a responsibility to keep up with technology and those kinds of things. So IRSAC was very timely. When NYSSEA did their proposal, they actually went a step further. They said, we think it should be 2 hours every year, which would be a total of 6 hours, obviously. So, I commend NYSSEA for thinking a little bit out of the box, because it is, for some folks, I'm a Luddite. I admit it completely. Practice management, all right? I mean, but for many folks, it is really an important concept. And so this really, I think, would be a step forward if they did it.
Well, if you are a CPA, you can take credit in a large variety of classes, including practice management. But the IRS has very, very narrowly defined what qualifies for an EA, and it has to be in federal tax matters or federal tax update or ethics or things related to retirement plans, because they do have an enrolled retirement plan person. So it's a whole different thing if you're a CPA. I don't think it's a bad idea, but I think it's part of what got us into trouble, if you will, and why the IRS started cracking down on this whole thing, is when they first audited a few years ago, they found that we were getting, I'm going to count me, but I really didn't do it. We as EAs were getting credit for a whole lot of really wonky classes. And they decided that's not a good idea. If you have 24-hour requirement minimum per year, minimum 16, 24 per year per cycle on the 3 years, then it ought to be tax. That's what we do. So I think if we open the door too much, I don't know. I think they're still going to have to control it. That's my opinion. So Frank may disagree, but you're never going to do some of those classes.
No.
No.
Impossible.
We're guaranteeing.
And never with PowerPoint.
It's not so bad, though, is it? Come on, Frank, this isn't so terrible. So it allows them to follow along with us.
Yeah, here's our first, we thought that rather than just, a lot of ethics sessions just keep talking about Circular 230 and they go over all the sections, that you really learn some more if you look at real life scenarios. And these scenarios were picked up off message boards over the past couple of years, and they're real. So one of the things we'll do, Sherrill and I obviously have some opinions.
Oh, that's hard to believe, but.
But feel free to jump in. We may ask you some questions also. But here's the first scenario. It's April 14th, and you review your client list. To track the final client returns that haven't been filed, you contact a long-term client for their Form 8879, and the client says, I mailed it. All right, they owe a balance. So 2 questions are up there. Number 1, can you file the return based on an oral assertion without the 8879 in hand? And B, does it matter if the client has a refund? Let me ask you. Question A, yes or no, can you file the tax return without the 8879 in hand? Well, everyone, now, listen, when you do this, I always observe that some people never put their hands up. This is easy. It's either yes or no. So my question is, can you do it? Yes. How many people say yes? How many people say no? Did anyone's hands not go up? All right. Tell me, someone that said no, why can't you do it?
Well, there's
yes.
a gentleman, who said you can't.
The 8879 is the equivalent of signing the tax return. And so if you're e-filing a tax return without having that 8879, you're essentially filing an invalid return.
All righty. You've heard what Phyllis said.
Could everybody hear her? Because otherwise I'll try to run the mic.
Okay, go ahead.
You want to? Well, no, I've got it. Okay, PK, I'm sorry. We need to use the microphone, so I need steps, and we're going to make
Okay. Yeah, so the 8879 has the numbers in it, right? The AGI, the tax or refund. So if you don't have it in front of you, client may think it's a $5,000 refund. In reality, it may be a $2,000 refund because some adjustments were made. So So this is the client signing off saying, yep, these are the numbers, I agree.
Well, it's the client agreeing that this is the tax return, right? They are signing the tax return by virtue of signing the 8879, correct? So can you file a return without their signature? It's their return. All right, I've got, and I can't go. I don't know. Do I give it to Dawn? Oh, do I give it to Dawn? You guys tell me yes
Thomas.
or no. Go ahead, loud voice.
Speak loudly.
If it was a long-time client.
Right. All right, Tom is saying, do you mind standing up just so that everyone can hear you, all right?
Okay.
If it was a long-time client and it was, the tax return needed to be sent today, if they texted me a signed copy, I would go ahead and file the return.
So you would have a,
But that's not in the scenario, is it?
No.
but
He's
you're offering that as
If
an
it
alternative.
wasn't a long-time client, I wouldn't do it.
So he says if they texted him a copy of it, and it was signed, and it's a longtime client, he would do it. Okay, so I had another comment over here.
Technically, you could file it, but you're not supposed to because that's your authority. You got to get the authority to file it. So,
All right, we'll give Dawn just, I know that, sweetheart, but we have to control you somehow.
Talk about ethics. Oh, my God.
Okay, I've got
Okay.
the hook on him, let's
So,
go.
If you read the 8879, you are not actually saying, you're not signing the tax return, you're signing an authorization for me to file the return on your behalf. So now I'm accepting an oral representation that you said it's okay for me under penalties of perjury. And that's where I get hung up a little bit, under penalties of perjury. Did they say that to you, that they're having you sign it under penalties of perjury? I, as a matter of course, even though I have power of attorney that may allow me to sign things, I don't sign them for clients. So I would say you don't want, I like the idea of a text. Now, the question was not would I file it, but should you file it? And that's why I said no, because I think.
Can the recording be stopped before I say anything? I'll be the devil's advocate and say that you can. It's not a good practice, but there is, what's the Bible for electronic filing? Anyone remember the publication number?
1345?
Publication number 1345, I believe that's the right number?
I think so.
That's the Bible. And there's a revenue procedure that says you as a tax professional must follow what's in 1345. In 1345, I cannot find, and I challenge anyone here to find, any directive that says you have to have it in hand. What does it say about 8879? It must be signed and dated. So quite frankly, if I have a long-term client and I call them up and I say, Tom, where's the form? Frank, I put it in the mail yesterday. And I've been dealing with someone for 5, 10 years. I do it. I can't say it on the video, but you get the idea.
So we have.
But seriously, there is no directive. And if you want to tell me there's a directive, I'll accept it. It's a bad practice as a general rule. We all agree on that. You should have it in hand. But I think the answer to the question still could be yes.
So I just want to make a comment for real-world stuff. I've been a member of the NAEA Ethics and Professional Conduct Committee, and very many of the complaints that we had come through that were from clients who said, this person e-filed my tax return, I never signed off on it. And of course, the practitioner was like, well, it was sitting in their portal, they should have, but they didn't, so anyway.
So I would disagree with Frank. Now, you guys all stop the world for a moment because, you know, there's danger in disagreeing with Mr. Degen. I know, he's shocked. I would not.
I'm never wrong, just remember that.
Oh, sweetheart. Okay, so, but we can disagree because ethics are not black and white always. Sometimes they're various shades of gray, 50 or more sometimes, I think. So, but if it's a longtime client, I might work slightly differently. I would agree. I don't like texted documents coming with personally identifiable information because they're not secure. But they could upload something in my portal, or we could share that information in a secure way. So you can see how ethics itself can get you into either a whole lot of hot water or kind of get your practice going.
And the second part of the question may change to some degree your answer. If it's a refund versus a balance due, would it make a difference? Would it make a difference?
Are there penalties?
Absolutely, because the penalty in Code Section 6501, is that right at that? Yeah, 6651, excuse me, I almost said it incorrectly, and I'm never wrong. All right, so in Code Section 6651B, it says the penalty for late filing is only on, this is the phrase they use in the law, on the net amount due. What is the net amount due? It's the difference between your liability and what your payments have been. So if there is no net amount due, what will not happen? I'm not saying it's a good idea. I'm simply saying what'll not happen is you will not get a penalty, all right? Now, the problem with that, of course, is you may amend the return later on or something goes on. And,
but there's an easy workaround. If you don't have the 8879 and they owe something, you extend it and they make a payment. And then the 8879 can come in and you can file it with it in hand. So, right? It can still be done. They can make a payment. They can make a payment electronically, or they can use Code Section 7502, timely mailing as timely filing, get it date stamped as going into USPS or one of the approved PDS, private delivery services, and it gets mailed, they're all fine. So I would do that rather than risk an ethics complaint. Nobody would ever bring one against you, Frank.
Absolutely not.
They would be afraid. All right, so let's take a look at the next one. We have clients that want to obtain a mortgage to buy a new house. The loan underwriter asks them not to report all of their business expenses. Now, this happens in California. Does it happen in New York? Yeah, okay. On the husband's Schedule C, so their tax return will be filed with more income and just amend it later, the underwriter says. So is it ethical to file a return showing more income and tax than what is due? Must you take all the deductions? No? Well, maybe sometimes. Aren't you supposed to? Always? Frank, what do you think?
Well, let me just ask a question before we get to this one. Suppose a person buys a $5,000 piece of equipment to have a sole proprietorship, and they have the ability to do a Section 179. Do they have to do the 179 to $5,000?
It's
What
an
do
election.
they have to do, though? They have to depreciate it, but remember, certain things are elections. But the answer to the question is, most assuredly, yes. All right, in your handout, you have, so don't worry about taking it down, but there are two revenue rulings that are in the handout. I have them here, but like I said, you don't have to worry. 5647 and 57538 specifically say you must take all deductions, including depreciation. But the reason I mentioned about the 179, same thing with bonus depreciation. Would you have to take bonus depreciation? No, because you can elect out of it, so I don't think, but your normal one. And there's also, and this is an important one, once again, it's in your handout, it's a Chief Counsel advisory, and it's 2022-051. And what it specifically addresses is the need to take deductions, because what would someone, not in this case perhaps, But why would someone not want to take all their deductions, not a business, not a mortgage? What do they want to increase? The earned income credit. And that chief counsel advice specifically addresses that and says you got to take them all. And what's interesting about it, you should really read it. I know it's mentioned in the text, but you should read it because they go on to say the following. If you didn't take all the deductions that are allowable to you, we, meaning the Internal Revenue Service, the service, have the right to disallow everything and treat none of those earnings as net earnings for self-employment. And if you have no net earnings from self-employment, what don't you have? EITC. It doesn't exist. You have to have earned income. So what they say in there is, you know, for the wise guys, that don't do it because we'll come back and take it all away from you as opposed to part of it, you know.
So it's a little bit different situation if a client comes to you and they have filed an incorrect return and now you have to amend. But here's the thing, does the IRS have to accept your amended return? No, there is nothing that says that they must, and I have actually had one turned down. They can also turn down an original return if it's replacing an SFR or they believe that it's a fraudulent return. So, you know, that can happen as well.
Just remember that an amended return is a not legislative grace, it's an administrative grace from the IRS. There is, as Sherrill said, absolutely no requirement to accept an amended return. There's nothing in the law that says they have to do it. Do they do it? Of course. But if you were a bad guy and you wanted to amend it, what could they say? Go by. We don't want to talk to you. Just one other thing, Amy, before I get to Amy's question. There's one other thing that some people think they're very clever. You know, some tax professionals. What's one possible way you could disallow some of the expenses? What code section? Anyone that was here yesterday or my session, do you remember that? 74. What section was that? 274D says that you can't take any mileage off transportation expenses unless you have records, right? So some clever say, oh, I have no records, can't take any up. Doesn't work that way because you can do reconstruction. The regulations allow you to reconstruct. And believe me, the IRS can go after you to make you reconstruct, to take the thing, all right? So keep it in mind. Amy had a question here.
Isn't the gist of this question is that you can't file a return that you know to be incorrect, even if you plan on correcting it later? That's not ethical.
Well, if you thought you didn't have to take all the deductions, I think you could sign it if you thought that was the correct thing to do. But what we're telling you, it's not correct.
In this situation, that's not the case. The case is that they're asking you to deliver.
Well, then in your case, what do you need? We're going to talk about that later. I mean, you need a reasonable basis, and if you know something's wrong, in that case, you shouldn't do it, right?
Yeah, yeah. And I was getting mailings from a local loan broker who was asking me to do this. I'm like, oh my goodness, you just don't even have any idea what you are asking somebody
There's also one other thing. There's a section in the Internal Revenue Code 6663, which allows for a penalty for a fraudulent return. So I don't know if the IRS would pursue that, but don't do that stuff.
All right, Frank.
Your clients are married with 3 children. People say to me, how many kids you have? I say 3. That's 3 too many. No, I'm only kidding. I have 3 also, all right? But in any case, they're married with 3 children. This is a real problem, folks. This is something I'm sure many of you, if not all of you, have seen. You've been preparing their returns since before the kids were born. The eldest girl is now 16 and started working a part-time job during the summer. The parents brought their daughter's W-2 along with their tax information. All right? Does that happen to a lot of you? The kids' stuff comes with the parents, right? So here are the questions. Can you prepare the daughter's return without meeting with? Can you discuss the daughter's tax situation with the parents? Can you deliver the final return to the parent without the daughter's express written authorization? Let's just do the first couple, and then we'll come down to the next part, which may change the answer a bit. So what do you think? What do you folks do? Sherrill's got the microphone there. Anybody want to say, is it ethical or problems or? Amber, can you get down?
Sure, I'm going to go with yeah, because most of the time minors can't bind anything, like legally sign anything. So would I, as a best practice? Absolutely not. I try to bring those kids in because they got to learn sometime, and now's a good time. But can the parents sign? The daughter can't really legally sign as a minor, as far as I know.
Frank can answer that, but I think you can sign a tax return even as a minor?
Yeah, I think if they, can the parents sign it?
No, can the minor sign the
Yeah,
tax
the minor
return?
can sign a return if they are competent. I mean,
So not
4
a
years
3-year-old.
old, But, you know, a kid like that's in middle school, they are authorized to sign their return. It's accepted. You know, a parent can if the child is not of, and it's not a question of competency, it's just a question, I think, of
There has to be.
there is no law that says you got to be 6 years old, right?
Yeah, but if they're doing it in crayon, I don't know if that's the right idea.
I mean, you do have really little kids, and you have a tiny bit of a 7216 question as far as, disclosure, but, then, I don't know, maybe I'd do a bit of due diligence, like, did your kid hand you this, or did you, sneak it out of her mail? Okay?
First of all, does the kid even know what they have to do? So that's part of it potentially, is the parent assisting. But we know that this happens. Hang on, I'm going to stop here.
7216.
A lot of times, if they're under 23 now, you have to put the parent's AGI in there. So, I mean, you have to put some parent information. So what gives you the right to put, I guess the IRS gives you the right to put the parent's information in there.
So I'm having
So
trouble
what
here.
he's saying is that for an adult child and still going to school under age 24, they need the parent's AGI on the return?
On a child's return? No. Well, let me just say just one mention before. Amber mentioned about disclosure. That's the problem we're worried about. Does my codifile, can you tell us what the code section is that we have to worry about? You said 72, I'm sorry, I didn't hear that. 7216 is what we're worried about. Do you think, I'm just throwing this out before Phyllis comments, the fact that the kid gave the stuff to the parents, is there such a thing as waiving your right to 7216? Can a child do that? I don't know, I'm just throwing it out, all right? Once again, I'm on a recorded line here, so I got to be careful what I say, but you get the gist? Yes, Phyllis.
Yeah, so, I mean, I think it's definitely a best practice now that we have so much online and, interesting activity that you really have to interview the kids because there may be a lot of things that the parents don't know about. Maybe the kid's even doing dog walking on the side or something like that. They might have more income. They also might have been doing a little dabbling in cryptocurrency. So I think it is important. And then, what if you interview the kid and you find out something like, oh my God, this person is doing something that their parents might not want them to be doing, and then, you really might have a disclosure issue.
Anybody else want to comment? Amy's over here, or Jamie, get Jamie first, and then come back down, if you don't mind. Save yourself
One of the
steps.
pet peeves I have is you have like a 19-year-old come in, they're a full-time college student, and they want to claim themselves. And you have no idea what the parent situation is. So usually err on the side of caution. I don't let them claim themselves without having more information. So it's sort of, you have to know more about the parents now. And all they want to do is claim themselves. I mean, that's, I don't know if anybody else runs into that problem. He did? Oh, all right.
No, we'll go up to Amy and then.
By the way, in your handout, there is a copy of a regulation. It's 301.7216-2, which talks about disclosure of related, not related parties, of a third party. So I think it gives coverage to those of you who feel comfortable with the child's W-2 coming in with the parents. I think it gives you some cover. So what I'd like you to do is, not now, we're not going to do it in the interest of time, but it's in your handout, so please read it. I think it's really important for you. I just one other thing I want to mention. Go ahead.
So in my practice, I have any kid who's 14 or older, old enough to have working papers here in New York, has to meet with me, whether it's on the phone or I have to talk to them. But I've had plenty of clients. I have a client whose 3 young children were all models. The parent is still the one who's engaging me, not the child, who can't enter into a contract. So it's very dependent on facts and circumstances.
Oh, I heard that phrase somewhere. That facts and that sounds so familiar, Frank.
The only thing I want to mention before we leave this slide is when the child gets to be 18, they reach the age of majority in 47 of the states, all right? It may make a slight difference, but the reason, you see the bullet down there, D, and that's accurate, but I wanted to mention this because are you all familiar with the 10-year rule when someone dies, all right? They have to take, if they were already taking RMDs, they have to continue it during that 10-year period. You know what I'm talking about, right? It was a big, big issue. When the IRS finally gave the regulations for the 10-year rule on the requirement to take RMDs, they assigned the age of majority as age 21. But understand something, the age 21 is only for the conditions in the required distribution under the 10-year rule under section 401A9, all right, I could have made something up, but I didn't want to, all right. But so understand that. You may read it somewhere and get confused. There's a different situation, all right?
But this actually happens in our practices. And I have one where it's a disabled adult child. Now he's well into his 30s, and the parents are the ones who sign it. When I send out organizers, they go by mail. I'm sorry, not everything's portal in my world anymore. So they go by mail, they're addressed separately. When it comes back, it all gets jumbled into one. When it goes back out, I separate. I have disclosure authorization from the adult child, but I know that there's a disability, and so I do communicate with the parents with a 7216 disclosure authorization. So we just have to protect ourselves. Okay, so actually this is yours because I don't have co-ops in California. So.
Yeah, in New York, I don't know where other places are, but co-ops in other places, you know, and when you buy a cooperative apartment, you don't buy the unit, you buy shares in a corporation that owns the unit, and you have the right to use it. But you know, sometimes co-op boards require a lot to get into it. So the question is, you provide a personal reference for your clients trying to buy into a co-op. The co-op board wants you to verify separately the husband or wife's income. And so there's really 2 interrelated questions there. Can you disclose this information? And number 2, how do you handle these requests in general? You want to say something about it?
No, I'm not taking it. We don't have them. Anybody have any comments? I got the mic. I'm hot and ready to run.
There's a New York City guy, a lot of co-ops, all right.
Sure, it happens pretty often. I get a disclosure from the client that I could give that information out.
Do you give it to, what do you do, Lee?
He's getting a disclosure authorization.
You get a disclosure from them, right. I think it has to be done.
Does it matter that you're providing a personal reference, not a professional reference?
I wouldn't bank on that.
Well, I'm just saying in the example.
Frank, does it make a difference?
I don't
Still
think the
tax
word
information,
personal
right?
was used in a sense of, other than the client
I think
prepare
client is
relationship. I think it may
the
just
base
be.
of the relationship. So based on that, you are providing a reference.
Do you do comfort letters in general?
Hold on.
No? Why not? Just out of curiosity. I mean, if someone says to me, can you you want to verify the Schedule C income?
But Frank, most,
I'll write them a comfort letter, but here's what I write it in a way that I don't say anything. I simply say, I prepared the Schedule C for Mr. or Mrs. or Ms. or whatever, and you got a copy of it, and it's accurate,
Frank, most times the co-op board,
Go, listen.
most times the co-op board, you're going to get all the applications and the time. Because I served on a co-op board for 27 years, and I wrote a lot of the rules. And I direct my board, you look at what the bank does most times, because the bank uses that information and prove it. We're just kind of going through the routine, make sure they understand the co-op, the rights of the proprietary lease, and stuff like that. So any other reference would be not income-based. It's probably something unrelated to a tax professional.
Sherrill, Amber.
I don't do co-ops, but I don't provide comfort letters in general because I feel like the mortgage lenders are pushing their due diligence and their liability for the due diligence out to us. They're checking a box and it's putting us on the hook. If they want to assess the risk of that person being able to pay back the loan, they need to do their job.
I would agree with that. So hang on just a second. Let me
Dan,
come.
you're loud enough. You don't need a mic, do you? Go ahead.
I just want to say, in my practice, every single client signs a 7216 disclosure. I don't know about the rest of you, but we use a lot of tools. We're using portals. We're using all sorts of online electronic tools where our clients' information could be going. I'm not sending my clients to Sherrill or Verifile or any of those places without them understanding it and signing a 7216. And I have listed all my software programs, and they're understanding that.
Okay, so just in general, you use 7216 disclosure authorizations. Okay, how about comfort letters? Do you do them for clients? No. If you're going to do them, I would put it in your engagement letter. If you're not going to do them, I'd put it in your engagement letter. If you're going to do them, charge them extra for it. And I would also, going along with what Amber is saying, be very careful about what you're willing to do. If I write one, I'm cautious like Frank is, I'll say I prepared the return for this year, included within is a Schedule C, which reports self-employed income. I am not going to say that that's a viable ongoing business now. What did I do? I reported past information. I have no idea what's going on currently. I have been asked to verify that them taking money out of a bank account would not adversely impact the business. How do I know? And I'm not going to be on the hook for that particular statement, no matter how many times I was told that I was the cause of them not getting the loan if I didn't do it. Somebody else would give them a loan, So you guys need to be careful about how you do it. But I would be sure you cover this in your engagement letter. Disclosure and also comfort letters as part of your services or not services. All right, so here we have a prior year client. They haven't contacted you. We're going to pretend we're a little bit earlier in the year. It's now April 15th. and they haven't contacted you yet about the 24 return. So should you just file a blank no balance due extension request for them? And is that going to be valid if the taxpayer actually has a balance due? Or how about this? I've heard some people, just as a matter of policy, file extension requests back in January, February for all of their clients. So what do you guys think about that? How do you handle extension requests that are filed? All right, I need hands up, I need to run. So you're shaking your head, so that means you volunteered.
Yeah, no, just don't do it because it's not ethical. I mean, it's just stupid. Yeah, no.
Just say no.
Just say no.
Okay, so what could be the problems if you are filing an extension request with no information?
It could be wrong. They might not be your client anymore. They might be dead.
You're full of cheer this morning.
I actually wrote on for Forbes, filing a blank one, it's, the IRS can rule it's not valid. It's just like they don't have to accept your amended return. They don't have to accept your extension. If you file a blank one, the IRS could toss it, and that opens you and your client up to a bunch of issues.
Now, they're procedurally going to accept it at that time, but if there is an audit and there's some case law on that, which might be in your materials, I'm not 100% sure right now. What am I pointing to? Okay, hang on. So just know that a blank one without a true estimate is not a valid extension.
To that point, if it's the case that they haven't contacted you because they're not choosing to work with you, and it's 4/15, they're trying to work with a different preparer to prepare an accurate or reasonably accurate extension request, your extending them could impact their ability to actually e-file a true one.
And it can affect their ability to make a payment electronically because something has already been filed. So for me, I would not do them.
If I know the client, what I do is ask them to put copies of any W-2s in the portal. I just want the W-2s with the withholding, wages and withholding, unless they have a Schedule C.
And that's what I do if I know them, and I know sometimes people have things going on in their life. You may have health issues. You may have things occurring. I will help protect them, and if I can get a W-2 and that's normally what they file with, then I will use that information and file an extension request. If they're a Schedule C, then I'll take a look at the prior year. Normal refund, normal not, maybe bump up the income, make a guess. But if it is a normal, regular client for me, I will attempt to assist, but it's far better if you have some information.
There's one other problem that you need to be aware of. What happens if that was your policy of everyone and you missed one? All right? And then the taxpayer files, wait, who's on the hook for that? You or the taxpayer? And the answer is the taxpayer.
The taxpayer,
All
always.
right? There is a seminal case, it's a long time ago, it's called Boyle, B-O-Y-L-E. It's in your handout, I believe, the citation. It's a Supreme Court case. And it says that a taxpayer can never delegate the responsibility of filing a return on time. All right? There's no matter what the situation is, it's the taxpayer's responsibility. Boyle was done back in my era when everything was on paper, all right? Now, what about electronic filing? Electronic filing, a lot of courts have refused to look at it because the Supreme Court has ruled, and some district court judge is not going to overrule it. Though a couple of them have said, I think it's time for the Supreme Court to overlook. But as it stands now, filing is still required responsibility of taxpayer. Now, the reason I mention that is, what about the 4868? About 2 years ago in the 11th Circuit Court of Appeals, and this once again is in your handout, but this is an important idea, It's called, the case was a gentleman named Wayne Lee, all right? And Mr. Lee relied on his accountant to file a 4868. Now, I don't know whether it was the practice of the firm for everybody or just he requested it. But the accountant forgot to do it or failed to do it or there was a, I don't know. It wasn't done. So when Mr. Lee filed his return, it was late and it had a net amount due, so he had to pay a substantial penalty. And Mr. Wayne went to court before he paid, and asked to have the penalty done away with. And why did he do? Because reliance on the tax professional, which is a defense sometimes against penalties. But the court said, same thing as Boyle. The taxpayer has the ultimate obligation to do things on time, all right? So the fact that the accountant screwed up didn't alleviate the penalty from the taxpayer. Now, the taxpayer is responsible. What can the taxpayer do? They could bring a claim against the preparer, but you can see that you could be a problem now for you, even though the taxpayer, suppose they owe $5,000 penalty. Who are they gonna come after? They're gonna come after you. So don't do it as a general rule, I wouldn't think. And someone mentioned that the only thing you need to do on an extension is you have to have a reasonable estimation of what the tax liability is. If you put a 0 there, you failed. And the IRS could, I don't think they do really too much, but they could.
There's a case where they did, but it's procedurally going to be accepted. But again, in an audit, then they could throw it out.
Right.
So,
yeah, so I wouldn't do it. Someone said maybe call somebody up. The 8879 is not in the mail, no. But going back, I personally wouldn't do it. Oh, no. By the way, do you all know that we got 4 EAs in one family over here? This is great, man. I'm always impressed.
So for penalty abatement in the IRM, on the reliance of a tax professional, they'll have what they don't allow and what they do allow as a matter of policy. And my memory of it is it has to be sufficiently technical in nature, outside of just general. Is there a good resource for knowing, what their qualifies there?
Mr. Lawrence, do you care to share the reasonable reliance on a preparer, mnemonic, or information? Because it will probably be tested on November 5. Do you remember?
There's a case
But
called...
this does get tested on the tax court exam, just so you know. Let's test him and see how he's going to do.
Okay.
Do you remember?
If you're going to rely on a tax preparer, you have to know that the person is capable and competent. You actually give them all the information that's involved, and you actually have to rely on that information and use it. Their advice, reasonably.
So it's not, yeah, that's very good. He just passed? All right. So it doesn't specifically, the IRM is not law, you know that. IRM is a resource of the IRS. It's not even substantial authority, is it?
There's a great case, write it down, called MediaWorks, MEDIAWORKS, and it discusses the reliance on a tax professional, and it gives the answer just basically what Michael gave, all right? There's 3 prongs that you have to have, and what's interesting, the man who did the tax return was a certified public accountant, and I'm not knocking CPAs, take this the right way. But the judge wrote, the mere fact that I think his name was Jung, that Mr. Jung is a CPA does not make him a competent tax advisor, all right? And so it's really, You just can't say, oh, my guy's an EA or my guy's a CPA. It doesn't work that way. You got to, and actually there have been cases where you got to show that people are taking CE, right?
Yeah.
But MediaWorks is a good case that you want to get a good discussion on.
Because taxpayers are using it to try to throw us under the bus. So you do want to be aware of it, and also to get out of penalties. So know what qualifies,
Colleen,
and
what time is
technical
it?
just isn't quite the right word, but the preparer has to be competent. So just being an EA, CPA, if they don't work in that particular area, and y'all know how big the IRC is, right? It's huge. I don't do international. You do some international. So he would be much more competent as an advisor in that area than I would be. I'd probably smoke him on some other area, though, I'm sure. Maybe not.
Well, you taught him well anyway, right?
Hey, I taught Mike well. Yeah, I did.
Michael, good job.
Okay. Let's go over here, and then we'll start the next one.
Another question about extensions. What about verbal consent? So I have a lot of clients that call me on April 15th, at 9 o'clock at night. Hey man, I totally forgot. I need an extension. Can you do it? They have no way to get me any type of information or anything of the sort to generate any type of balance on the return.
I do that frequently, but what I do is I'll ask them, how's this year look to last year? And they'll say it's roughly the same. So what I'll do is I'll use last year's numbers to give myself an idea. Now, if there was a liability, that might be a different story, But generally, I have someone that calls me up. I don't have a walk-in. So my clients are all long-time people. Some of them are even as old as I am. And some are even older, believe it or not. Yeah, I'm only 43, but I do that as a matter of course. I don't know if other folks do it. Would you?
But you would be making notes. Talk to so-and-so. I would initial and date my note. That's how I would do it. Talk to so-and-so. W-2 says this and this. I would do it. I would do it. So, okay, we're going to go over here and we will continue on. But sometimes you just have to go with what the information is that you are provided. Mickey.
To your point about the notes, are text messages back and forth to that client?
I hate text messaging because invariably, now Frank probably doesn't get any, but when I get a text message.
I'm sorry, I was looking.
Do you know what text messages are, Frank?
What?
I know you didn't hear it. Text messaging. You just answered perfectly, though.
Oh, all right.
Okay, so I just said you probably don't get any. So invariably, when I get a text message, they don't put any freaking name on it. It's just a message from somebody asking, am I going to pay tax this year if I do this? I'm like, who are you? I don't memorize all your phone numbers. So I just tell them texting is not permitted in my world. I decided that exists. I like email better. Text messages can disappear, right? Emails, I can, so is a text as good? Not in my world. Maybe it is in your world if you have a way of capturing it. I mean, I do if it comes through Ring, but they've got to tell me who they are or I don't honestly know what to do with it.
Yeah, my way of capturing it is I have a control group of X number of people who are in on it, and I force them to, if they haven't told me, even if they call me on the phone, unless they put it in a text.
When in my office, I use Ring, and so Ring is transcribing phone messages so I can capture some of the information, but if I'm getting it, God forbid they have my cell phone number. If I'm just getting it like on a cell phone number, I don't know who they are. It's
30-second personal break. You just said, who are you? Who's the singer that's saying, who are you? Who are you? Who? Oh, come on, you don't know? Roger Daltrey, the lead singer of The Who. Who are you?
I must be much, much, much younger than you, I guess.
Yeah, Roger Daltrey's still singing.
All righty. Okay, so Frank, I think this might be yours.
Yeah, long-term clients are getting a divorce and just notified you that a few weeks ago. And you prepare the tax returns, but also do the bookkeeping for the 50/50 owned S-Corp business and real estate businesses. Doing so means you must communicate with the spouse you may not choose to retain as a client. So there are 3 questions there relative basically to people getting a divorce with multiple entanglements, if you will. Letter A, must the new tax preparer step in to handle the personal tax returns if you return the business tax returns? B, how do you know when to disengage with one of the clients? And C, must you disengage with one of the clients?
Okay, so this could get ugly real quick, is my take on it.
The first issue is the S-Corp is a client on its own. Doesn't matter whether they're getting divorced or whatever they're doing. If they're going to maintain that business relationship, you are engaged by the corporation. As far as whether or not you're going to do their personal returns, that's probably dependent on facts and circumstances, but as long as you have to give them a conflict of interest waiver, and you have to explain to them, I mean, I generally don't keep both. I choose the one I like better and I keep them.
So the answer...
Or the one who can pay.
The question says must. So how many folks say yes? How many folks say no? There are a lot of hands that were still sitting there.
Well, because it's a very much,
You know,
it
you're talking about the
depends.
tax court exam.
It
You remember my
depends.
friend Richard Gardner?
Yeah.
When I took Sherrill's tax court class in her initial year, 2002, and I had a study partner. He wasn't in Sherrill's class, but he lives in Oklahoma. And his name is Richard, and I wrote him an email asking him a tax question. Richard, what do you think about this? And he wrote me back, and I always remember, and I never forgot it. It says, Frank, like all good tax questions, the answer is, it depends, you know? So I don't think there is a right answer or a wrong answer there. It depends, all right? Obviously, there's an inherent conflict, but it depends, you know?
So I think, and yak. I think that, and I teach this in my ethics class when I teach, that there is an inherent conflict between having the S-Corp as a client, even if you're doing the bookkeeping, just like Amy said, and doing the personal tax returns for the shareholders, married or not. There's an inherent conflict there. Not saying you can't do it, just saying it's really important to recognize that conflict, because situations like these, you never think they're going to come up, and then they come up. Some partner in a partnership gets ticked off, and you're doing the partnerships and a few of the partners, but not all of the partners. There's an inherent conflict there that you should probably deal with way up front in this process before it gets down to this point.
Do you think, I'm just curious, does it make any difference if the divorce is amicable? You know, some people get divorced and they're best friends, or they're, or it's Hatfield and McCoy's. I mean, does it make a difference?
Well, I think, again, that's part of facts and circumstances. If it's clearly not amicable, like restraining orders, yeah, I think you need to step aside fast. The worst entanglement I ever got, I stayed in the engagement too long because I didn't recognize it was going south until there were restraining orders, and I'm going, oh, I honestly thought I could finish the engagement, and then it just all blew up. So it can go really bad on you, and you don't even know because you're not living with them. You don't know what the arguments are. You don't know what's happening outside of the contact you have.
When they're married, you're giving advice to them equally. When you're giving advice to one or the other, I'm giving you advice which may be to the detriment of her, and you can't do that.
And I live in a community property state, and so that may answer differently how I feel, because California has very strict rules about community and when it ends and so forth. New York is a separate property state, so I think you do have to watch that as well. And I think Amy made a good point that the S Corp is a separate client, and they are still in that business together in the S Corp. So I think for purposes of the tax court exam, you will recognize the 60-15 conflict of waiver problem. It just probably cannot be done. But for purposes of real life, I think you just have to watch this or make a policy in your own office, Frank, that you just don't do this. You either refer it out or you keep one and relinquish the other. What do you do?
I want to comment. In the handout, there's something from the AICPA about one of the things, the way you could do is maybe keep it in the firm, but have a different team. But many of you are solo practitioners, right? Or, just maybe a husband or wife, or, one employee that works. It may not be possible to do what that suggestion is. If you work in a larger firm, you might be able to do that, but.
Yeah, I think it's just a really tough situation. So I think you watch it, and I think you act quickly, or you just stop it at the beginning, because the risk is big. All right, this is you, Mr. Degen.
Let me get down with it. Oh!
He likes this one.
This will never happen to me. All right, your client hasn't paid the $575 tax return fee due to you for the 2024 tax return preparation, despite multiple attempts to collect it. You decide to file a 1099-C, which is a cancellation of debt, right, to report the uncollected debt. So there's a couple questions up there. Should tax preparers file a 1099-C for a client's non-payment? If so, what is the filing threshold? What if you don't get paid? Can you or should you contact the IRS and have them remove you as a paid preparer? And what else can you do if the taxpayer doesn't pay? Send them in with the cement shoes?
I've had.
All right.
I've had problems like this in the past. I've never had to issue a 1099-C, but in my office, your return is not filed until you paid. If you don't pay and I file your return, then guess what? I'm SOL.
Let me ask you this. Do people pay you like when they pick their return up, or they mail you their $88.79 in a check, that kind of thing?
They pay when they pay. I mean,
Well, let me ask you this.
But
Suppose someone sends you the $88.79, signed and dated, and there's no check in it. Ask an Amy.
No, you don't, because tax return prep, at least in my office, tax return prep includes me getting paid. So it is not done.
So let me just ask you, what do you do with the $88.79 then?
So in order to avoid that, because I was told that and I was afraid, I don't send the $88.79 until they pay me.
Okay, so she is protecting herself because she's not releasing the $88.79 for signature until she's been paid. Because the problem is if you have a signed $88.79 in your possession, what are you supposed to do with it?
Like 3 days?
3 business days, I believe. It is called stockpiling if you hold longer, unless, for example, the IRS is not yet open to receive those returns.
I've heard that doesn't mean that you have to file it in 3 days if you haven't been paid. But because I'm not a lawyer and I'm not sure, I decided that I wasn't giving them an $88.79 until I had money.
Not giving them the $88.79 is the better answer, because Pub 1345, which Mr. Degen already told us about, does say you have to file. It doesn't say anything about you get paid, because does the IRS care if you got paid? No, they do not. I'm sorry to tell you.
Most IRS publications are not authority. You don't have to follow them. But 1345 there is a revenue procedure. I forget the number of it. It gets updated, but it says specifically you must follow it. It's
I almost
part
thought I
of-
caught you there for a moment when you started that sentence, Frank.
Does that then come back to the first question, where the 8879 is in the mail? That starts the 3 days, so we would have to file it, right?
Well, but if it's in the mail, it's not in your possession, is it?
But I thought they said it didn't have to be in our possession.
I've been
This is where
doing this
ethics
for
get so murky.
years, and you'll ever know. And all my time, I only got stiffed once. That's a lot of tax returns, one time. So my clients pay me all the time. Most of them pay me when they see me.
All right, hang on just a second. So we're going to go back to some basics here, too.
So I maybe am not, I thought at one point I actually looked at the form instructions for 1099-C, and those are really only supposed to be filed by people who issue bona fide debt, which is not your bill. So that's a no-no as far as my reading a couple of years ago.
Yeah, what
So we
Amber
were going to
said,
go back to if you can even
you
file a
have to be what's
1099.
called an applicable entity to file a 1099-C. This is all in your handout, all right? You have to be an applicable entity, and generally, it's a lending institution, you know, so you just can't indiscriminately. I don't think it means anything. I guess you could do anything you want, but it really is not applicable.
It was a long time ago, and I just hated this person so much, I sued him in small claims court.
So, okay. But suing somebody takes time and energy, and I don't know. Phyllis, you had a comment.
Seems to me that several years ago, when Karen Hawkins was the head of the OPR at the IRS, the Office of Professional
believe her?
Responsibility, that she
okay.
actually issued a communication to preparers that specifically addressed this issue. If I can find it, I'll.
And she said no.
She said no, yeah.
said no.
Absolutely.
But it still comes up. I still see people saying, I'm just going to issue a 1099-C on them. David.
Filing a lawsuit to collect uncollected fees can also give you a problem if you have E&O insurance, your next application, because they ask you if you've been involved in fee litigation.
You can also go take a summons in small claims court. You know, that's pretty cheap and easy to do. But by the way, what's interesting is I think the question C is an important one. If you prepare a tax return for compensation, does everybody in this room prepare their returns for compensation? Everybody? Yes. You are a paid preparer. Whether you got paid or not. Did you prepare the return and anticipate compensation? Yes, you are a paid preparer. In the Internal Revenue Code, and am I the only one that has a paper copy of the Internal Revenue Code? I do. Every year I buy a new copy.
It's out of date. I can tell you that right now. It's out of date.
Well, the last one I have is the winter of 2025. So I'll be getting the winter of 2026 forthwith. But in the 5,600 pages, paid preparer is nowhere there. The only place you find paid preparer is on a form, you got it right, 8867, the paid preparer checklist for due diligence. Nowhere else. Nowhere else. All right? If you're an income tax preparer and you prepare a return for compensation, you are a paid preparer. The IRS doesn't give a boom, 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 if you know what I'm saying, about whether or not you got paid. That's your problem.
So you are not going to be able to send them a letter and say, remove me, please, as paid preparer. That is, I'm not even going to say what I'm thinking, but there are speakers that say it. The first time I heard it, I thought it was a joke. We all laughed, but it has legs. It keeps coming back.
Along that line, I also have about 10 returns that I prepare for free.
Yes, I
But I just leave myself as paid preparer. Am I supposed to change that?
If you're not doing it for compensation, you're doing it for family, you're doing it for friends, my software allows me to remove the paid preparer box, and they just sign it.
I just meant, was it a matter of, I'm saying I'm the paid preparer, but I didn't get paid? I look at it as I'm the professional, so I leave it up there.
I think you can do it either way. I think you can do it either way, but my software allows me to tick that I am not. Okay, good
I
on
think
this
in the
one?
interest of time, I gotta go forward. This is your favorite.
All right, so this actually happened to a friend of mine. This actually happened to someone that we know. So this is back in the day when there was an old web board at NAEA. There's now a new web board, but this is the old web board. And this person posted on the web board, CIA agent showed up. Man, they come in with guns and everything and gold badges, and they wanted client records. And when she posted, she's like, I don't know what to do. And there are a bunch of us on there like, don't do anything. You know, don't just give those records. Don't do it. But she did. And I'm just going to tell you the short story. She got sued by her clients, who were protesters. So this was just like messy, whatever. But you have to know, I mean, it could happen. They could come in. If you're doing a big practice in particular, this could happen. You could have them show up and they want records. Do you have to give the records to them at that moment, even with a summons? No. Does the client have time? Yes. They can quash the summons. They have 30 days, I believe, is the time frame. Am I correct on that? 30 days to quash it. So if you comply immediately, if you get rattled, if you are a little bit nervous about this, and you just hand over those records, you can end up sued. And it can end up being even uglier than it was when they came into your office in the first place. So you need to be aware of your rights and your client's rights when you're talking to CI. So Frank, can you just ignore an IRS summons?
No. Well, what Sherrill gives an indication is that the summons doesn't require you to do anything at that moment. What the summons does is to require you to appear at a place and time with either yourself, a testimony, or the records, all right? So, you know, if you ever have the situation, just keep that in mind. You know, did LG talk this morning about Code Section 7206? All right. In my opinion, there are two powerhouse sections of the Internal Revenue Code, and they sort of go hand in hand. The first one is 6001. 6001 says that you, as a taxpayer, must keep records, receipts, for anything that goes on your tax return. And then the second powerhouse is 7602. And 7602 says, you know those records you're required to keep back under 6001? We have the right to look at them. All right, so those are two powerhouses. They're the ultimate gotchas. If you think you're ahead of the IRS, you're never ahead. All right, 6001 keeps the receipts. 7602, you do it. And I don't know if LG went in today, but there is a way, and Sherrill said you could try and squash the summons.
Your client can. You can't as the preparer, but your client
Right, yeah, your client could under the so-called PAL test. The PAL is a case decided by the Supreme Court, and there are 4 components in it. And the courts actually look at this. Last year, in 2024, in Northern District of Ohio, in a case called Eaton, the court dismissed the summons from the IRS because they said it wasn't relevant. And that's one of the conditions that you need to have, all right? So just keep in mind, if you ever get the summons, you are required to follow the procedures, but not on the spot. There's also one other thing that when the summons that you should be aware of is the IRS can issue summons to third parties, all right? And they're supposed to give you, the taxpayer, a 45-day notice. But if it's a criminal They don't have to do the 45. And in Sherrill's case,
It was criminal, and they were protesters. But as I said, this EA got caught up in it because she got sued by the taxpayers, who were ultimately wrong. I mean, you know, that's the way it is. But when you're a solo practitioner, you can't know everything. And sometimes it can be kind of scary when something happens. There's the value of things like the NAEA web board, the NYSSEA Google group, this conference, your ability to receive information from friends. I'm being spammed right now, so let me deal with this. The only people who call me are spammers.
All right, that's all. You mentioned about the IRM before. In the IRM, in Part 25, Section 5, is the summons handbook. So if you ever want to see what's there, that's a place to go, to the IRM to take a look.
Did you just say that the clients who sued her won? Who won?
Who wins in a lawsuit? I don't believe the clients won. Everybody loses in a lawsuit except the attorneys, right? Because it's going to cost you money to be defended. It's going to cost you energy, time, fear, all of those things. They didn't win, but they still sued her. And that's what I'm just saying. This is why we decided to bring this one to you, because I don't see that happening a lot. But if it does, I want you to know what to do, that you don't have to give it up immediately, that you have some information about what it is that you can do with that information. And we lost the PowerPoint, Frank. It's your happy day.
Hey, I'm in my element.
Damn.
All right, well, in any case, if we don't have it, we can go on to the next one anyway, all right? Do you all have your handout, or do you?
They all have a handout.
All right, let's go to number 9, because we are watching our time, too. We want to let you go at the appropriate time. There's a potential client with collection issues may not qualify for an offer and compromise now, but it is possible they could in another year or two with some creative work on their financial situation. Is it ethical to try to improve the taxpayer's financial situation in a collection manner? Is it ethical? What's the answer? It depends. Do you want me to see if the guy's there?
No, I think we can handle the rest of this, right?
All right, it depends. You know, is it legitimate or illegitimate? You know, in your handout, there is a classic quote from the quotable and esteemed Judge Learned Hand. All right, this is on page 37 of your handout. Anyone may so arrange his affairs that taxes shall be as low as possible. He is not bound to choose that pattern which will best pay the Treasury. There is not even a patriotic duty to increase one's taxes. You've all seen that quote along the line. What a lot of folks don't realize is the taxpayer lost that case, notwithstanding the glorious words of Judge Learned Hand. Yes. By the way, while Charles walking down, the greatest quote of all time is from Judge Learned Hand. The tax code is a fantastic labyrinth whose words merely dance before my eyes in a meaningless procession. Cross-reference to cross-reference, exception upon exception. I get goosebumps when I say that.
For a client that is divorced recently with outstanding tax debts, for the offer and compromise, are we supposed to be tracking the expected division of assets or the actual assets titled to the clients at the moment?
Beyond the scope of this class. Okay. Somebody in here probably does collection. I don't do collections.
I think at the immediate time.
Yeah, but we're talking ethics, and so you would do it the proper way. If somebody knows the answer for him, somebody does collection, help him out later on, okay? So Frank, we are coming down to 15 minutes.
Move on to number 10.
You want to go to number 13 and then backtrack? Because I'd like to get some conversation.
All right, okay. Let's go to the
Yeah,
end.
with your permission, and even if we don't have it, this is how we're going to handle it. I really want some discussion on the last one because this is real life, real things happening right now. So let's look at number 13, okay? You are a big proponent of the next best thing. That does not describe Frank and it does not describe me. Just be sure of that. So you want to make your practice run more efficiently, effectively, and you are very excited about generative AI, and you want to implement it next season. There's a more specific application of AI technology that is designed for tax. You guys all know that that exists, right? And you just can't wait to do it. It appears it can streamline your practice by reducing the time and increasing the accuracy required for your tax research and automating workflow. You can't wait. You're just ready to go. Are there any ethical considerations? And are there any potential issues using AI in your tax practice? Oh, we got it back.
Yeah, we just had to touch the screen.
All right, so let's... Okay, so let's talk about this a little bit because this is happening right now, right? How many of you are using AI? Oh my goodness, only a small handful. How many of you are thinking it might be a good idea? Okay.
So I know about these tax AI models because I had to play around with them in my college courses. They're really stupid. Like, ethics aside, they are dumb. If you use the free model, it will assume that every client you ask a question about is this homunculus of a client and will start giving you random advice. Oh, and then it will also do what generative models do and make up rules. Just ethics aside, don't use it. You'll go to jail for just being wrong.
Okay, so we know, and we've shared with you in this material, that there are attorneys who have been sanctioned for using AI-generated briefing because the cases are, the case title might exist, but the facts of the case that it comes to, the conclusions that it comes to, it's not real. It's not real. And let me tell you, I'm going to share something in particular with people who took our mock exam here recently. Tom was going to use AI to score it. AI was questioning Tom Gwarzinski on his suggested answer.
Cheryl,
We're like, don't
Jane
do that.
hasn't spoken. She
I
wanted to
know, I
ask
had
Art
a
about it.
hand back here, so let me do Phyllis first. And I'll
All right.
So Phyllis, you are using AI?
So, well, I mean, first of all, my practice doesn't exist anymore, but
So yes, you're using AI
yes,
in your record.
I am using AI, and you know, it's like everything else, it's a tool, and you know, like even your tax software can make mistakes sometime. So you really have to make sure what you're doing. And what I've found with the AI, and I don't use it extensively, but it's really a people pleaser. So it really wants to please you. And I needed something very quickly about a very particular tax court case. And I think I gave it the year and the name of the taxpayer. And it came back, and the first thing I noticed was, oh, it's a different judge than I knew had done the case. And then I was like, oh, the taxpayer was a man and now it's a woman. So in 2 seconds, it hallucinated a case because it knew that I wanted this and it couldn't find anything else.
So I will say, I agree that you have to use caution. I don't know if I'd call it stupid, but I did like that comment. Okay, I had another comment over here.
I want to know what's the next best thing. Since sliced bread, was that what that meant, or?
We're way above sliced bread.
Oh, all right.
So I totally agree on the AI, but I think there's a confusion often between automation and AI, and sometimes automation can be helpful, although the time taken to set it up can also, counteract that. So there are some distinctions, and some of the newer models that are coming out that really say that AI but are automation actually can be quite useful.
Okay, And I would agree that automating things can help move things through, but I hear that people, I'm going to do Amber quickly and then come back over here, that some people are using AI in that automation, and I'm not exactly sure.
So some of the automation may have AI built into it. And again, back to ethics and disclosure, you have to be aware, and most of us are. How many of you read your end user license agreements, the EULAs? Okay, the stuff in the 6-point font. You have to be aware, if you're using one of these tools, one, how you're using it, and two, what you're putting into it. You can't put PII into these things because they're what's called large language models. They're using your stuff to train their AI, and that's disclosure and use. You've got double violation there. And the other thing, well, I forgot, whatever.
Okay, let me come back over here. So you have information. PII, again, is personally identifiable information, so you can't disclose information about your clients when you are doing that, and your comment.
I was really going to say the same thing, that there are privacy issues because, especially with the free versions, it's out there. Everybody has access to what you've put in there, and then they're going to learn, from your bad information, and you're also learning from everybody else's bad information.
And you have to train the AI, right? You have to keep giving it more and more specific information. Is that correct? You've worked with it more than I have. You have to train it? I'm asking you. When you're working with AI, you can put further parameters on the questions that you are asking? Yes?
Yes. Oftentimes when you use any AI model, you can't just ask. Yes, you have to do some wrangling yourself.
So you have to try to put boundaries on it, add more information.
Yeah.
I want you to look at this, no, not that.
Yeah. It'll forget about them. Next question.
Okay, Christine, and then over here.
Boy, I think my son thinks I'm stupid. I actually use AI, and AI is a huge thing. You can't just say, this is bad AI, and something else is not AI. I use a program called Jump AI. I just bought it, and it's working great, and it's got a lot of security in it. It's not whole language. It does have parameters. I use it in my investment business. It's multi-factor identified. It's got privacy. It blanks out the PAI, and it is a huge, and it's a note taker. When I meet with a client, I get the permission to record it, and then it presents me with a recap of everything that was said, and it puts it in tasks. I promised the client I did this, that, and the other thing. It's
Okay, so
not this evil.
That's one use.
It's not an evil AI.
Okay, pass it along over that way.
I can't actually comment on how true this is, but for generative AI, I heard that a good follow-up question is to ask it what it made up in the prior response. I can't truly attest to how useful it is, though.
Okay, anybody else have any comments or concerns? I mean, I think what you're hearing from us is you don't just jump on this. You do have to be aware that there are some potential issues.
I use it fairly extensively in my writing and to prep coursework. You always have to trust but verify. So I will ask it for court cases, but I always go out and check the sites. The gentleman over there, the better your prompt, and sometimes you have to refine your prompts, the better information you're going to get returned. But I will tell you, there are some things that it absolutely, to use the vernacular, sucks at. I have asked it, because I'm not real great at writing my own speaker bio, prepare a speaker. It gives me like a resume. I'm like, dude, I already got the job. I want, something that makes me sound good to all you, people. And it just, 4 tries, and I was like, never mind, I'll do it myself. Okay?
So you're prompting your information, your verification of it, your concern about privacy, how the information is used now, and how it will be used in the future, or potentially in the future. All of that is going to make a difference. This is not really quite AI, but there are tools that I have had students use to assist them in their studies, which has then put my copyrighted material out there for everybody's sight and use without my permission, which was certainly not an intended use and authorized use on my part. So there may be things happening that you don't even know just because you've chosen to use a tool that's available readily online. We are in an entirely different world. And you gentlemen who are quite young and coming into this, it's way different than it was when you went into this and when I went into this. It's way different. We have different concerns we have to address. Frank, you have anything to add or questions?
The only thing I'll say, I'm a proud Luddite.
Which means he doesn't know a lot about some of this, right?
No, which means that I'm just a guy that doesn't believe in all this modern technology.
Okay.
I still do my tax returns on paper. No, not the final product. But when I meet with a client, I do everything on a thing, and I can tell them what their answer is. And then I put it on my computer and make sure that I haven't screwed up. And invariably, if there's any errors, the computers, no, I mean, but seriously, I still do that mode. I know a lot of people think I'm an idiot, but that's the way I do it, on paper, use the computer to check my work.
And also, because I know the software that you use, sometimes you have to prompt the software to get the correct answer, because not all software is created equal, and I'm not running anything down, but the software that is readily available comes in at all different price points, anywhere from under $1,000 to upwards of $20,000, $30,000. And so your software, depending upon the work that you do, may require your assistance also. And to quote one of my friends, there's no substitute for a good tax professional. And so you need to know when you're doing the return, how good is the output. Don't just take it and sign it, send it on to the client. You have to know tax law well enough. That's part of our ethical duties. We have to know it. We have to be competent. We have to be able to do that as part of our preparation of the returns and our representation of taxpayers. And Frank, we only have a couple of minutes, so I don't know if we have about a minute and a half. I don't know if we have enough time for a
I'll just make the
scenario.
final comment, my final comment. By the power vested in me, Sherrill can still cut to the front of the lunch line. Go ahead. Is there anything else you wanted to mention?
Anything else any of you want to cover? You have fulfilled your ethics for this time.